Hello, my name is Jim Gilstrap. I'm a licensed insurance counselor, and I enjoy working with insurance professionals to learn more about the products offered to consumers. In this video, I'd like to talk a little bit about condominium coverage gaps. Now, before we begin this program, I'd like to start with a little quiz to test your knowledge on exactly what a condominium might be. In this slide, I've presented three types of buildings, and my question would be, which one of these buildings represents an apartment? Which one of the buildings represents a condominium, and which one would be considered a townhome? Building A would be a 5-story high-rise with 10 units. Building B would be a garden-style apartment where you have 2 units on the lower floor, 2 units on an upper floor. And then Building C would be 4 units butted together by common walls under one building, under one roof. So which one is apartment, which one is a condominium, which one is a townhome? In the 10 years that I've been doing this, I've had very few agents give me the correct answer right off the bat. I think they understand the question I'm asking, but it's difficult to phrase the answer because this is actually a trick question. The true answer is all 3 units could be an apartment, all 3 buildings could be a condominium, but only one could be a townhome, and that's Building C, where you have the units side by side. So depending upon how the customer calls and asks for questions, the client could call up and say, I need insurance on my condominium. Well, if you're inexperienced with insuring condominiums or don't have much background in condo coverage, the temptation is to pull out the condominium insurance form and begin writing it right away. The client could actually be renting from a unit owner and simply call his dwelling a condo, in which case if he's renting, he would need a renter's policy. Or in the case of Building C, where we have a townhome, the unit owner may be responsible for the exterior walls and roof. In that case, they would need a homeowner form, not a condominium form. So hopefully you've answered this and we can look at the correct coverage form going forward. I'll explain the differences. So what makes a condominium a condominium? Well, it's defined by the ownership. Who owns the building? That's what makes the condominium that type of a building. There's usually a condominium association or a co-op that owns the entire structure, the building from the ground floor all the way to the roof. And the individual, what they purchase is the privilege to live in that unit and to become part of the condominium association. I like to think of it in terms of the individual buys a box of air. They're living inside the 4 walls, but they don't actually own the 4 walls. So there's very little real property that that individual might own. Now, when it comes to insuring the building, the condominium association is responsible for insuring the entire structure according to the condominium bylaws. The bylaws set forth by the association determines who owns what portions of the buildings. It could be that the association owns all the way to the drywall, whereas the individual would then only own the fixtures inside the unit. And it could be set up where the condominium association owns just the framing, and then the drywall in would be the responsibility of the individual. So let's look at the master policy first, and that's what we would call the policy that the condominium association purchases to insure the entire structure. And there's 2 types of coverages provided by the condominium master policy. The first one is to rebuild the unit or the building to its original condition, and this is called a single entity broad form. What that says is however the original construction was 10, 15, 20 years ago, that's how that policy would have to rebuild that building. The second type of insurance coverage is it's called a bare walls concept, which means that the structure is rebuilt either to its framing or to its drywall, and then the individual unit owners would be responsible for the interior construction. Things like cabinets, fixtures, painting, floor coverings, all that would come into play. And this is extremely important to know as an insurance professional so that you can understand how to insure the individual's property. Now let's do a quick policy forms review. If it's a true townhome where the individual owns the exterior walls, then they would need an HO3 homeowner, a standard homeowner form. And that would primarily cover the exterior structure itself, the personal property of the individual, and liability. Now if the individual is renting a condo unit, of course they would need a renter's policy represented by an HO4. And the HO4 would provide coverage for their personal property as well as the liability coverage. If we eventually determine that this is indeed a true condominium where the client needs a condominium policy, that would be an HO6 policy, which provides, similar to the HO4, provides personal property, liability, and provides some unit coverage. And by unit coverage, what I mean is the interior structure unit, the cabinets, the drywall, things like that. And in most HO6 policies, they do provide some type of unit coverage. In the older forms, they only provided $1,000 of coverage, which is not enough. In the newer forms, most insurance companies now provide a $5,000 coverage limit. And in some of the enhanced policies that companies represent and bring about, they might go higher than $5,000, maybe 10, 15, or even a percentage of whatever the personal property limits are. But in the industry standard now, it's $5,000 of unit coverage. So my question is, would this be enough coverage in the event of a loss? So let's look at a scenario. In this particular instance, the individual has a kitchen fire. They leave a pan on the stove, it catches fire and destroys the cabinets, the appliances, whatever's in the kitchen area. Plus it smokes up the entire unit, and once the fire department gets there, or maybe the sprinkler system is set off, there is a lot of water damage to that interior unit, as well as the unit below, if they happen to live on the upper floor. So my question is this enough coverage? Well, we have to look at $5,000. That's going to be taken up in just the smoke mitigation, the water restoration, trying to get the carpet out and replace the carpet. That $5,000 is going to be gone in a few moments. In addition to that, is there enough liability coverage? Because now this person is responsible for the damage done to the unit below by starting the fire. So those individuals, that insurance company is going to want to subrogate against that person to get their money back. So is the liability limit adequate? Well, most insurance companies on an HO6 policy give away $100,000 of liability coverage. Should be enough in our scenario here. But what if this fire destroyed 8 units in the apartment building or the condominium building? Now that individual is responsible for the damage to the entire structure, as well as all of the personal property belonging to 8 other individuals and their belongings. So that $100,000 would certainly not be enough there. So as insurance professionals, that's the other thing we need to be concerned about, is the liability limits. Is there enough liability coverage on this HO6 for the client? So let's do a quick recap. We must determine, first of all, what form to use as determined by the ownership of the policy, and is this really a condominium, is it an HO4, or is there a homeowner policy needed? The next item is we need to confirm the proper insurance to value. Is there enough personal property coverage? That's determined by the unit owner, having a discussion with what they own, personal property, their belongings, television, stereos, things like that. But also, we need to ensure, is the $5,000 enough coverage, or does that need to be increased? We need to look at the bylaws to find out whether or not they're responsible for the entire interior portion, or perhaps it's back on the rebuild to original condition form where there's very little to be concerned about. And then finally, is the liability limits adequate? When you're living in a cluster community such as a condominium, there's a lot of interaction with other people, and any type of loss to one unit will more than likely affect all the units. So there's a more pressing need to have higher liability limits in that situation. Plus, we need to be aware of other coverage gaps. Now, I've listed 7 coverage gaps here that come to my mind, and there's just not enough time to go through all of these in this single video. But a couple of the concerns would be, once we determine 5,000 is not enough, well, how do you determine how much coverage is needed for that unit? If they live in a 2,400 square foot condo, that 5,000 is not going to be enough to cover that. So how do you determine the exact amount? That's one issue. Another is loss assessment coverage. Cannot stress enough the need for higher loss assessment coverage. This is particularly true along seacoast areas, where the master policy is not set up with a flat deductible, but a lot of insurance companies now are using a percentage deductible because of the threat of hurricanes and windstorms. So a $2 million condominium building may have a 10% deductible. So you're looking at a $200,000 deductible from a wind loss. The condominium association will turn around and assess all the unit owners their share of that deductible. And the standard $1,000 offered under the policy more than likely isn't going to be enough. Loss assessment coverage needs to be addressed as a potential coverage gap. Some other coverage gaps would be additions, alterations, and betterments. The client may purchase the condominium and then modify it. They may replace the countertops, the standard countertops, with granite. They may put tile in the flooring. Well, none of that would be covered by the policy, the master policy rather. They would have to have an individual coverage. So all of those come into play. Another concern would be water, sewage, and backup. When you're living in that cluster community, depending upon the plumbing from other units, if it clogs within the building and backs up into the individual unit, you could have a serious problem of a coverage gap. So there's a lot to discuss and a lot to cover on these other items that I just don't have time with in this video. Well, that concludes this video, and I must ask you, if you have any other questions, you can email me at jimgil@gmail.com. I'll be happy to answer any questions, or even if you'd like to set up some type of a training program, a 1 or 2 hour training program, I'll be happy to work with you on that. Thank you for watching, and good luck on your careers.